Over the centuries, we have witnessed trading of businesses and management in general revolutionize alongside the advancement of technology, innovation, and societal trend in the pursuit of humanity's betterment. Even the smallest of them are meant to play a vital role in order to drive our cash movements, solidifying our foundation of our local economy. This also includes the contribution of SME businesses. But what in the world is SME, you ask? I'll leave the explanation to my colleagues. This is Sarah. She wants to establish her very own boutique. She has been to so many banks, but seems like those banks don't like her that much. It's good to note that her range of business knowledge is equivalent to a teaspoon.
Miss, you seem so upset. What's the matter?
Oh, I really want to start a business, so I went several banks to apply my bank loan, but none of them accepted my application.
Oh, poor thing. Actually, I'm a business consultant. Perhaps you need some advice regarding to that?
Sure, I guess.
So, you need to be familiar with the term SME. You know that?
I literally have no idea. What is that?
The more you know, the better. Let me share with you. So, let's break down to know how businesses in Malaysia are classified into micro, small, and medium enterprise, commonly known as SME. These classifications are based on two main criteria: annual sales turnover and number of employees. There are two types of sector, which is manufacturing sector and service and other sectors. For businesses in the manufacturing sector, as for micro enterprise, earn less than 300,000 ringgit annually and has fewer than 5 employees. As for small enterprise, earn between 300,000 ringgit and less than 50 million ringgit with 5 to fewer than 75 employees. And as for medium enterprise, earn between 50 million ringgit and up to 50 million ringgit and employees between 75 and 200 workers. Other than that, for the services and other sector, as for micro business, earn less than 300,000 ringgit and has under 5 employees. As for small business, earn between 300,000 and under 3 million with 5 to fewer than 30 staff. And as for medium business, earn 3 million to 20 million and higher between 30 and 75 employees. You should note that all SME must be entities registered with SSM or other equivalent bodies. It, however, excludes entities that are publicly listed on the main board and subsidiaries of
Small and medium enterprises, or SMEs, are the backbone of Malaysia's economy. They fuel innovation, create jobs, and contribute significantly to the nation's growth. But what happens when these businesses hit a financial roadblock? Securing a bank loan should help businesses grow. But for many Malaysian SMEs, that's easier said than done. Today, we're diving into the top 3 reasons SMEs struggle to get their loans approved. Reason number 1, insufficient financial documentation. Comprehensive records like audited financial statements and cash flow statements are essential for banks to assess their creditworthiness. Unfortunately, many SMEs rely on informal bookkeeping practices, making banks hesitate to approve their loans.
The next point is low on income. You see, credit history is not all that a bank looks at it to determine if a business is eligible for loans. The income of a business also plays a huge role in whether or not bank loans get approved. Banks place great importance on the business's income as they show if the business is capable of serving its debts. If you lack steady income to cover your business expenses, your financing application is likely to be rejected as the bank won't be able to convince that you can repay loans.
Last but not least, inadequate collateral. Collateral plays a crucial role in the loan approval process as it serves as security for the bank in case the borrower defaults. SME often struggle to provide adequate collateral due to limited assets or undervalued property holdings. Without strong collateral, banks may be hesitant to grant loans, especially for higher amounts. This is particularly challenging for service-based SME, which typically lack tangible assets that can pledge as security.
Small and medium enterprises are the heartbeat of Malaysia's economy, driving growth, creating jobs, and building communities. But what happens when economic uncertainties threaten their existence? The Malaysian government has stepped in with proactive measures designed to help these businesses not just survive but thrive. One of the most impactful measures is financial assistance. The government has rolled out subsidies, grants, and low-interest loans to ensure SMEs have access to the capital they need, even in challenging times. Tax relief measures are also in place, allowing businesses to reinvest their savings into growth and innovation.
Secondly, digital transformation support. Embracing technology is no longer optional. It's essential. The government is supporting SMEs in their digital transformation journey by subsidizing digital tools, cloud services, and e-commerce platforms. Training workshops ensure business owners acquire the skills needed to integrate technology with their operations.
Last but not least, there is an expansion of export opportunities. The government is promoting initiatives to help SMEs venture into international markets. This includes establishing trade agreements, providing export subsidies, and organizing global trade fairs to showcase Malaysian products and services. Supporting policies are being developed to ensure SMEs can navigate the complexities of international trade, such as tariff reduction and export financing schemes. By expanding their reach beyond domestic borders, SMEs can reduce dependence on the local economy and tap into global demand.
So now you know, with financial assistance, digital innovation, and export facilitations, Malaysian SMEs are better equipped to face uncertainties and seize opportunities. Together, we can build a resilient economy that uplifts everyone.